An asset is anything that puts money into your pocket, whether you are working or not. A liability is anything that takes money out of your pocket. The more income-producing assets you own, the wealthier you become. This is the foundational law of building wealth. That is really all you need to know to become truly wealthy. Watch the full video to discover the 11 types of assets the rich focus on owning, which ones you already have, and which ones you are still missing. 1. Cash. People often say, cash is king. Others say, cash is trash, because inflation eats away at its value. So, which one is true? The truth is this: the rich do not hold cash to get rich. They hold cash so they do not miss opportunities to get rich. First, cash gives you massive negotiating power. Between someone who can put down cash immediately and someone who needs time to arrange financing, who is more likely to close the deal? Obviously, the person with cash ready. Second, cash allows you to act like a bank. Peer-to-peer lending platforms can offer returns of 7 to 20% per year. But remember, higher returns always come with higher risk. That said, cash is a double-edged asset. Hold too little, and you miss opportunities. Hold too much, and inflation quietly erodes your purchasing power every single day. 2. Real estate. This has been a favorite asset of the ultra-wealthy for centuries, and for good reason. It is one of the very few assets in the world that combines three powerful financial forces at the same time. First, cash flow. Rental income puts money into your pocket every single month. Second, appreciation. The global population keeps growing while land is limited. Over the long run, real estate values tend to rise. And third, leverage. This is where the game really changes. You only need to put down a portion of the purchase price. The bank lends you the rest over the long term. In simple terms, you use the bank's money to buy the property, and you use the tenant's rent to pay the bank. But remember this most important thing. The home you live in, or the car you drive, if it does not generate monthly cash flow for you, it is not an asset, it is a liability. 3. Bonds. Put simply, when you buy a bond, you are lending money to a government or a company. In return, they pay you a fixed interest payment, called a coupon, on a regular basis, and return your principal when the bond matures. The defining feature of bonds is that they are boring. Their returns are usually low, sometimes only slightly higher than inflation. You will never hear stories of someone becoming a millionaire by investing in bonds alone. So why do the wealthy own them? Because when the stock market crashes, when the economy falls into chaos, high-quality government bonds are often the one asset that holds its value or even goes up. 4. Stocks. Stocks allow an ordinary person, with relatively little capital, to own a piece of some of the greatest companies in the world, like Apple, Google, or Amazon. However, this easy access is a double-edged sword. The stock market is extremely volatile in the short term, and it amplifies human emotions, greed when prices rise, and panic when prices fall. So how do the wealthy approach stocks? They do not trade constantly. They do not try to time the top or catch the bottom. They focus on the quality of the business, on its ability to generate sustainable profits, and they hold for many years, sometimes even decades. To them, stocks are a tool for compounding wealth over time, not a lottery ticket to get rich overnight. 5. Mutual funds and index funds. An index fund, such as one that tracks the S&P 500, allows you to own small pieces of 500 of the largest companies in the United States with a single investment. That means you do not need to be a financial expert to own the best businesses in the economy. Warren Buffett, one of the greatest investors of all time, famously instructed that 90% of his wife's assets should be invested in a low-cost S&P 500 index fund after his death. If a strategy is good enough for Warren Buffett's family, it is probably good enough for the rest of us. 6. Brand and goodwill. This is an intangible asset, but one with enormous power. Brand is what a company says about itself. Goodwill is what customers feel and say about that company. When these two come together, they create an asset with incredible economic value. Why are people willing to pay $40 for a t-shirt with a Disney logo when a similar plain shirt costs only $5? That $35 difference is the value of the brand. But this does not apply only to big corporations. it applies to you as well. Your reputation, credibility, and expertise in a specific field are priceless assets. 7. People. The greatest asset of any organization is not its factories or machines, it is its people. Breakthrough ideas, efficient systems, and innovative cultures all start with people. A great engineer can write a piece of code worth billions of dollars. A strong leader can rescue a company on the edge of collapse, just as Steve Jobs did with Apple. The same principle applies to your own life. Always remember this. Your goal is to become an irreplaceable asset. When your skills, experience, and network become truly unique and highly valuable, you are no longer just an employee, you are an asset. 8. Raw materials and commodities. These include things like gold, oil, precious metals, and more recently, assets such as crypto, classic cars, rare watches, and fine art. The wealthy do not hold these assets expecting explosive growth like stocks. They hold them as a defensive asset class. During periods when trust in the monetary system breaks down, when inflation runs out of control, or when geopolitical instability rises, physical assets like gold tend to hold their value and protect purchasing power as paper money weakens. Some segments, such as high-end art or limited edition watches, have delivered impressive returns. However, this is a complex arena that requires deep expertise and is not for everyone. Never invest in something you do not truly understand. 9. Digital assets. We are living in a digital age, and an entirely new category of assets has emerged. E-books, online courses, software, music, videos, design templates, and more. The defining feature of digital assets is this. You create them once, but you can sell them an unlimited number of times to people all over the world, with almost no additional cost. A developer can build a simple app and sell it on the App Store, earning money even while sleeping. An expert can record an online course, and their knowledge continues to serve thousands of students for years. This is the business model of the 21st century. 10. Royalties. When you write a book, compose a song, or invent a technology, you own the rights to it. Every time someone wants to use, reproduce, or distribute your work, they pay you a fee. Actors from the TV series Friends still earn millions of dollars each year, even though the show ended long ago. That income comes from royalties paid by TV networks and streaming platforms that continue to rerun the series. This is passive income at its highest level. You do the work once and you get paid forever. 11. First mover advantage in business models. Microsoft Office is a classic example. They were not the first company to create Office software, but they were early in turning their file formats, 1.1, into global standards. Once everyone started using those formats to share documents, competitors who came later had almost no chance. In this case, the long-term value did not come from the software itself. It came from the business model and the standards Microsoft established early on. And that is the real asset. We have just gone through 11 types of assets. This list might feel overwhelming at first, but the goal here is not for you to own all of them. Your mission has only 3 steps. First, understand them. Second, choose 1 or 2 asset types that best fit your current knowledge, interests, and resources. And finally, the most important step, start. If you found this video helpful, don't forget to like and subscribe so you don't miss similar content coming next.